Today on Fear and Greed, the local share market tops 8,500 points for the first time ever. The founder of Buy Now, Pay Later group, Zipco, cashes in and heads off to do his own thing. And a judge in the US once again knocks back a $56 billion payday for Elon Musk. Plus more on the strike by Woolies warehouse workers and why Qantas loves baby boomers. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Wednesday, the 4th of December 2024. I'm Michael Thompson and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning is a cracker. The Australian share market has topped 8,500 points for the first time, taking full year gains to more than 11%.
Confidence that Australia's economy will avoid a recession and continue to grow, hopes that interest rates will start falling next year, and a relatively optimistic outlook for the global economy is pushing the market to new highs. There's a bunch of companies trading at or near record levels. In fact, 9 of the top 25 companies on the ASX from a broad range of sectors are at highs. Goodman Group, Macquarie, Aristocrat Leisure, WiseTech Global, REA Zero, Brambles, Pro Medicus, and of course, Commonwealth Bank, the biggest stock on the market, now worth $265 billion, nearly 30% more than number 2, BHP. The only real disappointment over the past year or so have been the big miners and the energy companies, and that's on the back of commodity prices. There are actually now some one-time blue chip companies that really were downtrodden that are now performing really well. Over the past year, AMP, for example, is up 70%. JB Hi-Fi is 90% higher. Qantas, trading at a record high, up 65% over the past year.
Now, Sean, you have taught me over a long period of time now that equities are traded on future earnings.
And Michael, you learned.
I not only learn, I listen, I take notes, I study. I'm determined to prove myself to you. So basically, a share price reflects what investors think is going to happen, right? So if you kind of just look at that then and look at what the market is doing, it seems like investors are confident about the future, right?
There certainly seems to be a sense that the economy has bottomed, even though interest rates are still at 12-year highs. We'll find out more about that today with the release of the economic growth figures for the September quarter. Economists are expecting a jump of 0.3%, 0.4%, 0.5%, I would say. That compares to the 0.2% increase in the June quarter. We'll still probably be in a per capita recession. The reason we are growing is because of the high migration rates. So we're in a per capita recession. That's why it feels sometimes like times are particularly tough. But market makers, investors are confident that the worst seems to be over, and that's what keeps pushing the local market higher.
Just in the interest of decoding jargon as we go through, per capita recession. What does that mean?
So we have economic growth of, let's say, 0.5%. If you break that up into individuals, so per capita, per person, we have been going, but if you base it on a per person basis, we're actually been going backwards for the last 2 quarters, all this year, in fact. The reason the top line number looks good is we have had this huge migration, more people. Therefore, overall, the top line number has gone up, but if you split it per person, we've gone backwards.
Okay, thank you for the explanation. Now, Sean, before we leave the local market, we talked about the record high yesterday, but where did it actually finish up?
I was very excited. I thought it would finish above that 8,500 point mark. For those who don't follow the markets, that's a pretty significant thing. But alas, in the final few minutes, it fell. It finished about 0.5% higher at 8,495 points. A record close, but not quite that 8,500 points. Pro Medicus led the way among the large caps. That's an imaging company. It rose more than 3%. Minor Fortescue Metals, REA, that's the online property group, QBE, the insurer, Brambles, the pallet company, Aristocrat Leisure, the gaming machine manufacturer, they all rose around 2%. Worst of the large caps were software group WiseTech Global and Woolies. A little bit of corporate news around Michael. Star Entertainment expects to receive the first $100 million of a $200 million debt facility next week after the casino group met preordained conditions. Its share price jumped 9%, best of the top 200. But wow,
Is this the debt facility that comes with a massive, massive interest rate? Isn't it something like 13% or something like that?
Off the top of my head, I can't remember quite what it was, but it's huge interest rate, definitely.
Extraordinary. I suppose desperate times though, right?
Yeah, absolutely. It needs money. Insurance broker Steadfast Group share price rose 3% after an internal review found no evidence of improper incentives or compliance manipulation. If you're going to have a review, you may as well make it an internal review, don't you reckon? And nothing against Steadfast here. I'm sure that it was all fine. But,
investigate your own problems first and then, look, we're all clear. Anyway, so yes, let's go on.
Metcash's share price jumped to 7.5%. Metcash is the wholesaler for groups like IGA and Ritchie's and a couple of hardware stores. So its share price jumped 7.5% after investment analysts upgraded the stock following Monday's half-year earnings. And just before we leave sort of the finance world, I suppose, a couple of smaller super funds, Telstra Super and Equip Super, they'll merge to create a fund with $60 billion under management and 225,000 members.
That has been the trend, hasn't it? Over quite some time now, it's this consolidation of the industry, right?
Yeah, it sure has. And it's been encouraged by regulators, and the funds are doing it more and more frequently at the moment.
All right. Now, can we just talk quickly about Qantas, please? Because you mentioned Qantas hit a record share price yesterday. One broker reckons it's only going to get better, though, thanks to travelling baby boomers.
Yes, that broker is from investment bank Morgan Stanley. They reckon Qantas and Delta Airlines are two global carriers benefiting and will benefit more from a pivot in luxury spending, from basically handbags and clothing to premium travel. There's a real switch going on, according to Morgan Stanley. Global luxury companies like Kering, Moncler, LVMH, they boomed post-COVID, but in part due to a slowdown in Chinese demand. Chinese consumers are not spending like they used to. Some of those luxury companies are really struggling. The analysts reckon that the shift is on to travel, particularly baby boomers. They reckon Qantas and Delta are set to ride the next wave of luxury spending. Now, Qantas's share price closed up 2% yesterday to $9.03. At its worst during COVID, it was trading at about 25% of yesterday's close. I think it was $2.30, $2.40 or something like that. It's now $9.03. Quite an incredible ride. And what the guy from Morgan Stanley is saying is that the baby boomers out there, we know there's 2.5 million of those people retiring over the next 10 years. They've got lots of money and they're going to spend it travelling.
Sean, just tell us quickly about the interview that you have coming up after the show. You are speaking with Josh Simons, the CEO of Vinyl Group, which is a really interesting company.
It is. It's got vinyl.com, it's got Jackstar, it's got Vampire, it's got Serenade, Bragg Media, which is Rolling Stone and Variety. So it is all related around music and popular music, but all sorts of different aspects of it. And so we talked to Josh about what's in the group. It's listed, obviously, how he runs it. We also talk about his biggest shareholder, Richard White of WiseTech Global fame. He's had a few challenges himself. We ask him about Richard White and his interest in Vinyl Group. It's just a great chat.
Yeah, it's a good conversation. It is coming up after the show. Before that, though, Sean, we've got plenty still to cover. The latest on the Woolworths strikes. We've got the founder who's selling up to the tune of $100 million. We've got the court decision against Elon Musk. So much more to get to. We'll be back in a moment with the rest of the day's business news. Sean, Woolworths says the strike by warehouse workers in Victoria and New South Wales has cut $50 million in sales from its supermarket business.
And counting. Big problem for Woolies, as we discussed yesterday. It is struggling to keep stock on shelves. That includes some liquor outlets. Now, Woolies spun out Endeavour Group over the past a couple of years ago. Endeavour Group owns Dan Murphy's in BWS. They still use the same warehouse facility. The problem is that Dan Murphy's and BWS are now being hit by this strike and stock is low there as well. Yesterday, Woolies applied for an urgent order to ensure access to distribution sites in the two states. It said it's been negotiating with the United Workers Union for 4 months. The workers want a pay increase of well over 25% over 3 years. That's well above inflation. The union also wants Woolies to scrap new rules which would discipline workers for not operating fast enough. That's the pointy end of this dispute. It's coming as the company itself is under pressure to keep prices lower, with the ACCC watching its behaviour very closely. November, December, very busy time for Woolies and for Endeavour Group, of course. What they don't want to do is have this drag on for much longer, then suddenly have to rebuild inventory in the run-up to Christmas, because that takes time. And Michael, there's only about 3 weeks till Christmas.
And counting, Sean. Now, this next story it's aspirational and it's inspiring for anyone who started their own business, right? At any point. The founder of Buy Now, Pay Later group Zip has resigned. He's cashing in $100 million worth of shares, and he's going to set up his own family office investing business.
Wouldn't you do that?
Oh, absolutely. Actually, I don't know whether I'd set up a family office investing business. I think I'd just lie on a beach and just the terrible financial advice. I'd just live off the interest of my $100 million.
I think that's an excellent idea. The guy's name is Larry Diamond. He resigned on Monday. Yesterday, he sold 30 million shares at $3.35 a piece, according to the Fin Review. He still has 25 million shares, so what's that? That's another 100 million or so. He founded the business in 2013 with a guy called Peter Gray, floated it in 2016. It got as high as $12 a share in early COVID days when the buy now, pay later boom was on. Of course, Afterpay was the big one there. That was eventually bought by Block. It then tumbled to as low as 26 cents late last year. Zipco really was in dire straits. Since then, it's up 700%, the best of the top 200 over the last 12 days. So, Mr. Diamond, he's cashing out. Good on him.
Yeah, well played. I mean, he's earned it. That is a roller coaster ride, isn't it? The nerves and the stress of trying to build that business and follow it all the way through. He's definitely earned this. Now, this is a fascinating one, Sean. Law firms are going into non-legal advice, picking up business and partners really as well from the big four consultancy firms as they push beyond really what is their traditional service lines.
Exactly. Minter Ellison, 10% of its fee earners are now consultants, according to the Fin Review. The trend is for clients looking to legal firms to provide consultancy work as they shy away, not desert, but shy away from the big four consultancy groups. We're talking Deloitte, EY, PwC, and KPMG. Other law firms now offering consulting style services include Ashurst, Clayton Utz, and King & Wood Mallisons. So that's 4 very large law firms now in consultancy.
Time for an economics lesson here, Sean. I feel like I need a little bell to ring. Remember John Laws with the cowbell kind of thing in the studio? Maybe not. Might be a slightly obscure reference here, but as soon as we mention economics, I feel like I need a bell now because I know I'm going to get a lesson. Australia's trade surplus fell to its lowest level in 6 years during the September quarter. This matters, Sean.
It does matter. Export prices fell, mostly iron ore and coal to blame for that one. Now, I am going to have to give you a bit of an economics lesson. So the current account balance is all important. It feeds into economic growth. What's the current account balance? Well, that's the trade balance that you just talked about, plus payments made to local and foreign investors, so dividends and sort of shifting of finances across borders and all that, plus other stuff like foreign aid. So you got trade, sort of payments/dividends, foreign aid. Put all that together, deficit of $14.1 billion, higher than expected. That actually detracts from economic growth. So we talked about earlier in the show, economic growth being 0.3, 0.4, 0.5. When you get a big deficit in the current account balance, it detracts from growth. Of course, the September quarter GDP is due for release this morning. We'll find out how much it's subtracted from growth then.
Collins Foods, better known to most of us as the licensee of a bunch of KFC stores in Australia, and Taco Bell, I think, as well, isn't it? Yesterday warned on downbeat consumer spending and a squeeze in profit margins, hopefully not to the point where remember when they had to use cabbage instead of lettuce?
Cabbage instead of lettuce.
Yes. Yeah, that wasn't a profit-related thing. That was just because of a lettuce shortage, but yeah.
Yeah, no, I think it was the price of lettuce went through the roof, so I'm calling it profit-related.
Great. I'm on board with that. Please go on.
Anyway, Collins Foods owns 285 of the 750 KFC outlets in Australia. It's also got 74 stores in the Netherlands and Germany. You're right, it does. It has 27 Taco Bell stores in Australia. Its net profit fell more than 50% in the half year to October 13. It had to cut its half year dividend as a result. Same store sales in Australia during that 6-month period were flat. All important same store sales, because what they're comparing are stores in the same, are comparing sales in the same number of stores. So even if they increase the number of stores, they're not counting it in that. So it actually shows your growth rate, same store sales. Anyway, flat in Australia, down in Europe. Tough market, that one. Guzman y Gomez, that's growing, doing all those drive-throughs. We've been talking about that a bit. Bunch of Korean-style fried chicken groups around. That's on top of McDonald's and Subway, Domino's, Pizza Hut, etc. Collins Foods share price yesterday closed down 3%.
All right, turning to international news now. Sean, the boss of Intel, which is, of course, the one-time leader in chip making, has been forced out of the group's board, while Samsung have teamed up with Jeff Bezos, the Amazon founder, to invest in a NVIDIA rival.
Do you know what I love about that? How many companies can we get in one sentence? So Intel, Samsung, Amazon and NVIDIA. I like it.
That's a lot.
Yeah. The common theme here are chips, microchips. Now, of course, Intel was the market leader. It never sold to anyone else. It was everything. Well, hasn't it been left behind by NVIDIA? It used to be the big company. Now Intel's worth $100 billion US dollars. NVIDIA is worth $3.4 trillion US dollar. Someone had to go. Intel's boss, Pat Gelsinger, took the top jobs 3 months ago. He vowed to restore its preeminence. Alas, the AI boom has largely passed Intel by. Its share price has tumbled as a result. Goodbye to Mr. Gelsinger. Turning to the Amazon Bezos deal, they've invested in a company called Tens Torrent. It basically hopes to take on NVIDIA. With a lot of these new themes, and AI obviously being a massive one, it takes a long time for companies to make money. Now, in AI, really only one company, NVIDIA, has made a serious amount of money thus far. The second generation companies, which presumably Samsung and Mr. Bezos is hoping Tens Torrent is, the idea that they'll be able to turn around chips fairly quickly and at least match NVIDIA is what they're hoping for. It would be interesting to see if it happens.
So they're really just hoping to chip away at NVIDIA's dominance. That was lazy. That was horrible.
That was lazy. That wasn't good.
No, that was like when you started this story, I was like, there is an opportunity here, and I couldn't think of anything.
Yeah.
And that's why I was silent while you were talking. And then after all that time, I still didn't deliver. I feel like I failed you.
Any new listeners this morning? Occasionally Michael breaks out into a pun-filled rant.
A pun frenzy.
A pun frenzy.
Yeah.
And I do apologise for it. Please don't turn us off for it. He gets over it.
Yeah. It's fleeting. It's always brief. Now, the story that I mentioned at the top of the show, this is just extraordinary. A judge in Delaware has knocked back Tesla's attempt to revive a $56 billion US dollar, that's billion with a B, $1 billion pay package for Elon Musk, saying that shareholders' overwhelming reapproval was not enough to override her previous rejection of the package.
This has been a bit of a saga. Judge Kathleen McCormick concluded that Tesla's unprecedented effort to push the 2018 pay package through a second time, 4 months after she first voided it, was creative, her word. But the board had no ground to overturn her original outcome, according to a story in the Financial Times. Tesla, after the finding, immediately vowed to appeal against the decision. Mr. Musk's response on X was almost Trump-esque, I'd say. All he said, absolute corruption.
Did he say it in all caps, though?
He didn't. Only capital A. The punctuation was correct. So not totally, like there's a full stop at the end, not totally Trump-esque.
Give him time.
He'll get there. It's a shame, isn't it, that well, let's not go down that path. Tesla stock has surged 44% this year, much of that coming after Donald Trump's election victory. That means Mr. Musk's stock options have gone from $56 billion when they were voided in January to more than $100 billion. That actually, if he owned them, would put his wealth at about $343 billion. I mean, that obviously includes his stakes in SpaceX, X, and XAI. $343 billion. If he's ultimately granted the package, he'd end up owning more than 20% of Tesla, up from his 13% currently.
All right, now a tip for new listeners. You did hear Sean just say, it's a shame, and you were about to share an opinion, a bit of a hot take, a bit of a spicy kind of opinion on something. Those come out in our newsletter. They are not generally part of the podcast. The podcast is all just pretty straight news. If you want the opinions, if you want the context on why things matter and what Sean really thinks about it, our newsletter comes out every Wednesday. Head along to fearandgreed.com.au to sign up. So it's coming out in mere hours. And maybe we'll find out what words came after it's a shame.
Maybe.
Maybe. Who knows? He probably
Maybe I will too. Yeah, that's right.
Yeah, there we go. All right. Also up next is the Fear and Greed Daily interview. Josh Simons from Vinyl Group is our guest today. Definitely worth a listen to that one. Thank you very much, Sean.
Thank you, Michael.
It is Wednesday, the 4th of December, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, TikTok, Facebook, and X. I'm Michael Thompson, and that was Fear and Greed. Have a great day.